month. So when you look at how much it is per month times how many years, we always tell people to start out with that first 5 years, right? 1 to 5 years. You have to categorize each year how much it's going to spend, and you have to think about inflation, right? Inflation is 3%, all right? It fluctuates, but it's like 3.5 right now. So you think about, okay, based on this year, then next year's inflation, so I need to times it by this. So that's how much I'm going to be charging people, and then that's how much expenses are going to increase every year. So for the first 5 years, I need to have this much money each year, each month. Who am I going to go to? So you go to lenders, you go to investors, you go get grants, you go ask people, you go do an at-will offering campaign, because if you're a business owner, if you're for-profit, it's called an at-will offering. If it's a nonprofit, it's called a donation. So I always hear people talk about, I did crowdfunding. You can't do crowdfunding just because you have a business. You can't do crowdfunding. All right. For one, it has to be determined specifically what that money is for, and all the money has to be utilized specifically for those aspects that you're saying. I have a client who loves fundraisers. I'm like, I know you love fundraisers, but you don't have a not-profit business. You have a for-profit business. All right. So legally, it's an at-will offering. Okay. But you can't live off at-will offerings. You can't live off donations, right? Kunal said, how much money we need to have a month for how many months should we calculate? 6 to 12. That's just for you to live. That's not for your business, right? So let's go over this. Types of startup funds. We have lenders. People use the credit union. Credit unions are great because their rates are different, and it's an association, so a group of people that are all in it together. They're great in aspects if you have, decent credit, they understand. I always tell people, Wells Fargo is a good one, Navy Federal is a good one, BB&T is a great bank, and I have relationships with a lot of these bankers, so that way going to SBA, the Small Business Association, is great. They have a process you have to go through. Investors, we also talk about, if you look on the other side, we have investors. You have people that want to put money into your account because they've realized what you're doing is a great idea. They may want to partner with you, or they may want to be a silent partner and just want to invest. And they're going to ask you, well, can I, be an investor, and then can I be on your board, and can I get a little bit of income when you start making some money? So if your business does well within the first 3 years, after the third year, I want to start taking some money and make it, put it some aside each quarter because I worked hard giving you some finances or some intellectual capital. And it's real. That happens right now, every day. Okay? So we want to think of those type of things, because a lot of people start businesses and they don't have any money. And you can't always just tap into your 401k, and you can't always just use up your personal credit cards for business expenses. It lasts for a little while. Let me tell you, the first year, and plus the one good thing about when you file your taxes for the first year and you already have income over $2,500 to account for any of the losses. If you have anything that goes against, if you have all of your expenses and everything lined up and your business actually is funding and making some money, you will want to file it eventually for taxes. And so the tax corporation understands, the government understands that when you start your business out for the first year, you're going to accumulate so many expenses. So they give you a time frame of where they understand it's that 3 to 5 years, like, oh, that person's taking a loss. They will ding you and be like, you took a loss because we see you have all these expenses and you didn't really make any money, so you're in the red. But we allow you that. We talked about Amazon took, 7 years to make a profit? So they must have had a great accountant.
How many exactly years then they give the kind of the tax break for the startups?
So you get tax breaks every year.
Yeah, but it's kind of like first couple of years, so therefore first couple of years you get.
Yeah, it's 3 years.
Okay.
Mm-hmm. So like when I talked about the 3.
Quite a bit, so.
Yeah, when I talked about the 3 to 5 years, that's when they give you fluctuation.
Okay.
After that, they really start, getting down to.
Bring some profit.
Yeah.
So the new tax rule allows you to pass on losses for up to 5 years now, as long as you are, I forgot what the exact rule is, generating
do
it's
have,
based on the amount of revenue, okay.
yeah, they do have laws, and so, and,
You can carry forward some losses, so like the
Yeah.
first year, you lost 50,000, but next year you made 200,000,
Uh-huh.
you can take some of that loss and net it against this year's
Okay.
profit, otherwise you didn't pay anything, but now you gotta,
Yeah.
you can't, I don't know what the years are, but so many years you can carry forward.
Forward and back.
and they do that.
Yeah. forward
And they
back.
do that with business expenses too, okay, not just with that. So, so let's just keep going. So that, just make sure you guys read over this. There's great ways, like we talked about, to get investors. You can do, founders, friends, families, you can do a crowdfunding, you can do, have business angels, and they give you like terms on what they want, and that's kind of what I was telling you about the investors. And then venture capitalists are people who, you know, really want to venture into the business with you, and they don't mind being like a silent partner, and they will get, some income because they know it's gonna be a good profit. All right, so, and then there's also grants out there. So there's money out there. Like I talked to you guys about going to the Small Business Development Center. The Small Business Development Center is in Leesburg, and I suggest everyone go there because they can talk to you about ways to get funding. And if you go on the line for SBA.gov, they have great tutorials about how to get some business funding, and they have counselors and different seminars you can go to help you with that ask right?
Can I ask you a quick question? I don't know if you know the answer or not. So, we talk about starting a business, right? So you start and you're going through, what if you want to buy a business? I mean, do banks need you to kind of take, okay, maybe the last 3 years tax return for the company, and then if
Yes.
it's not profitable, what are you gonna do to make it? Is that how
Okay.
they do it, or?
So what happens is, that's a good point. So that's why you guys have to have a business plan. If you go to a bank right now and tell them, or an investor right now and tell them, I need business funding, they're gonna say, where's your business plan, all right? But back to your question, what they do is they look at the business model of the business, and they look at the existing taxes for the business, what areas that failed, because I actually looked into it because I wanted to buy a salon.
Okay.
And it was either I was going to buy the salon outright that was already there and just revamp it.
Right.
So they want to know what your revamp process is.
What are you gonna change?
Yeah, who's coming in to help you? How they also look at the geographical location, if it's smart for you to put something there.
So they kind of do a business analysis as well on what you're asking?
Yeah, so this is when you actually go to a bank,
Okay.
and a lender, and they have people specialized in that aspect, but they're gonna ask you like, how much startup cost do you have? Are you is it a franchise? Who else can we talk to about this business? They also wanna make sure, certain franchises don't want to put another business in a location that's approximately
Competing.
close to that other one. So it's a different, things that they look at, but a lot of it is why did the business fail? And what are you gonna do to make it different? Mm-hmm.
Because their business is what's gonna pay them back.
Right.
Right.
They want you to
They
be
want-
profitable.
right.
So they can
Right.
make
They
their
wanna
money.
make sure it say that it will be.
Right.
Also, creative financing you can do also. You can leverage the business's current assets and revenues in order to use that.
And just take out a loan against the
Yeah,
assets
against
that
the
they're
assets.
protecting.
Yeah,
Okay.
and that's what the business plan is gonna do anyway. It's gonna look at,
Who would you go to? It's like, if, let's say the owner wants to sell it for 100,000, right? You
mhm.
wanna know, is that a good deal, is that a bad deal? Would that be the accountant?
I would go to I was gonna tell you, go to the
Okay.
accountant.
Okay.
Go straight to the accountant, go to the lawyer, go to a lawyer, go to a contract lawyer as
So
well.
they'll have to kinda analyze it, and, right?
Yes,
I know big corporation is based on multiples of EBITDA,
right,
but small businesses is not really, it's a little different, so.
An accountant can do a business valuation.
yes.
Mhm.
Okay.
Accountant's gonna do a business valuation, and they have the trends on whatever industry that
So they have the market.
that business is.
Mhm.
So what they do is they use multipliers.
Okay.
And every industry has different multipliers. It
Right.
says X times revenue equals this particular business.
Who did you say would do that?
An accountant.
Your
An
accountant,
So,
yeah.
yeah, an
We
accountant
use
that does business.
a common
valuation.
3.5 multiple in
Okay.
order to evaluate a business. But all they're gonna do really at the end of the day is leverage the income versus debt,
Right,
and that's gonna determine really the value times the multiple like he was describing.
okay.
Is really the most basic way.
So basically net book value of the business and then the EBITDA multiples is the two factors.
And then the DTI debt to income ratio, they're gonna average that.
CTI.
The debt to income ratio, they're gonna average that into it, and they're gonna say, can you afford to take over the debt of this current corporation, plus run your corporation for a year, 2, 3 years, so that you can be profitable and get out of the sinkhole of the business. Yeah, it's a very in-depth process, but I mean, it's very possible.
If I may add this also, be careful, I bought an agency in order to make my business bigger.
Yeah.
Be careful with other business owners trying to sell you their credibility, okay? Credibility is not transferable. Ownership are people interested in working with that particular person is not transferable. So unless they're willing to stay on as a partner for a certain period of time,
Yes.
don't allow them to upsell you and increase their value based off of them being such a good asset, right? Yes, that's great, but you're no longer here anymore. And all these customers now are gonna know that.
Right.
So either you stay and I'll buy it at that, or you go and we're gonna drop another 20%.
So they're gonna inflate it just based on them saying.
Exactly.
Okay. Selling
It's
themselves.
their babies, so
Right.
yeah.
Yeah, of course.
I had an accounting firm
Uh-huh.
that it was 3 partners, and they formed one CPA firm. One partner left it. They thought that because they had been working, those people doing taxes, those people would stay. Those people left. Those people,
See?
those
Yeah, they're
people
gone.
They
left.
probably go with the accountant that left.
Whatever,
They're used
that
to it.
accountant left,
Yeah.
once retired, so it was done.
Wow.
So you gotta look at all of those things, look at all those, and you can write certain things in the agreement.
Right.
Yes.
When you're buying a business, because it may not be, I'm gonna hand you $100,000, it may be 5 years, 20 grand a year. Certain
Over
bo-
time.
Certain, if you reach certain thresholds, there could be bonuses in place for a payout, there's different ways to structure it. But
That's a good point.
yeah.
Yeah, I had that happen, so a friend of mine owns a glass company, and he had gotten to the point where he was sick, and he was like, he had ran the glass company since he was in high school, actually. And he owned it, him and a partner, he bought his partner out, and he ran it solely. And another company wanted to come in and buy it from him, but they wanted him to stay on for a few amount of years, and they paid him a salary, to make sure, and he still has the benefits of the company as well, to make sure that they can run the company smoothly because he knows the whole business. It's just that he wasn't able to do it anymore. So there are some great,
So kind of a transition period.
Yeah.
Even to retain the customer, they may start trusting you.
and all the contracts.
It's in the best situation for everybody, right?
Yeah.
If the business owner truly cares about the business and their customers, they'll want to stay on for a couple of years.
Right.
They want to make sure that handoff is
They're
smooth.
taken care of.
Yeah.
That's true.
So let's go real quick. We're gonna talk about the one that says board of directors. So these last 2 slides and your activity and you're done, all right? So board of directors. It's called board of directors. And it looks like this. All right, so this talks about your board of directors. All your companies have to have a director, okay? You have to, so when you form a company, we're talking about your vice president, your president, right? Your secretary, your treasurer, okay? And then the directors underneath. So I'm on boards for different companies, and what we do is we have our board meetings. So this is something that's definitely required for every business that you should do, but particularly for C Corps and S Corps, we have to make sure that we meet regularly, and we only have to meet once a year, it says in our bylaws, but mostly if you were to have a fully funded business, something were to happen, the government would look at it, they want to see every quarter that you're meeting and what metrics are you measuring your business by. Do you have meeting notes? Who's keeping track of what's going on? Is there an action plan? You have to have all these things in your business. So you think about it, like right now, some of us are employees, so we work under someone, right? So we're thinking about now making our own business, and who are the people we want in our business? Who are the people that we want to help us run this business? And that's one of the reasons why I gave you guys the org chart, all right? So before we leave, I want you guys to write out some of the people who's gonna be in those positions. Who's gonna be the president, all right? Who's gonna be the vice president? Who's gonna be your CEO, your chief executive officer? Who's gonna be your CEOs, your chief operating officer, right? Who's gonna be your CTO, your chief technical officer, chief technical officer, and that person manages your IT, manages those people. Who's gonna be your CFO, chief financial officer? They're gonna manage your accounting department, right? Your CEO is gonna manage the overall things, and your COO is gonna manage the operations. all right? Because there's things that you do as a business owner that you're not gonna have time to be on the phone with everybody, you're not gonna have time to go over every aspect of the business, and something may happen, maybe a customer service issue, or you may have purchasing come in, or a bill needs to be paid, and you're like, okay, who's gonna do these things for me, and who's gonna check in with me regularly to let me know what's going on with this business, okay? Because you have a lot other upper level things to focus on, okay? And I always tell people, if it's something that you can pay someone else to do, so if you think about how much you would normally charge someone after we went over that selling price, how much you would normally charge someone. So if I'm charging $250 an hour, right? Should I spend my $250 an hour making copies? No. Okay? If I charge $50 an hour, is $50 an hour more or less than making copies? Someone who can make copies for me. How much would you charge someone to make copies for you? How much would you pay?
I'm an accountant, I make my own copies, I think, unless I can,
No,
unless I can bill my hours.
I mean,
Ten?
what about $10, $12?
$10, $12, right. So, do you have $10 or $12? Yes, you do. Because you know why? You're out making $99 an hour, or $250 an hour, or whatever your rate is. Or, when you look at the selling price, your product is selling at a, what? It could be selling, say you're making, tell me some of the things you want to do. I remember you were talking about writing, right?
Writing?
Yes.
Draw.
No, I'm sorry, writing, not writing.
Draw.
Art. Art, that's right. So if you were to do a painting, I'm sorry, thinking of that.
Okay.
If you were to do a painting, right? The supplies, the material, the space, the time you took to develop that wonderful picturesque item, and you're gonna sell it. If you really needed someone to go run an errand for you, would you take the time away from your painting, because you know your painting's gonna give you about, what, $200, $250? Would you take an hour away from that to make a copy, or would you say, let me pay someone $10 an hour to make a copy?
Well, currently, I would go do that myself.
But going
But
forward,
going forward, maybe that's.
now you're thinking about it,
Right.
like, okay, I'm not gonna take away from working on my painting, okay? So these are things we wanna think about. So we talk about that, and then the last one is called the functional structure, okay? The functional structure is how your department's hierarchy is. And your hierarchy is based upon, you always wanna make sure you have directors of different departments, like we talked about. Your HR director, your productions director, your research and development director, your finance manager, your sales and marketing manager, your IT manager, your HR manager, and your customer service manager. This is the meat of your business. All right? And the reason why companies don't always grow is because they don't form it correctly, for one. And they don't always allow people to do their jobs. And you need to have descriptions about what this person's gonna do. And when that person gets in there, they can write a description about what some of the daily duties that they're gonna do. You need to have those as a log somewhere and keep them on your computer. So that way if they leave, you can hire someone else to do it. Because you cannot take that 10 minutes a day for that, that $10 an hour, you cannot put that on yourself. It needs to be put elsewhere. If you're gonna pay every month, you have to pay every month to have IT services for your computer, for your website, you're not doing that yourself. That's something you already averaged into your costs. So why are you trying to do all that? It's already averaged into your business costs, okay? And there's a statistic up there, although this is like a UK one, it also applies, some of these statistics apply to US as well. Some people say their structure is their barrier to improving their customer experience. Sometimes the structure can be too big or too wide, where people can't even get through, and they don't really know who to go to. All right, so that's why we need to make sure it's clear and concise, and that we have people for every aspect. All right, because you may be on a client call or client meeting, and you may have a customer that needs to talk to you or someone about something in the business.